Clay Patton on the Rural Radio Network. Well, we've rounded the corner. We're in the home stretch of 2022, but this cattle market continues to be turbulent and continues to be volatile. To tell us more, we're going to talk with livestock market analyst Kyle Bumsted. Of course, we hear him on the Rural Radio Network every day, but wanted to be able to expand on some of those ideas coming here into the fourth quarter. And Kyle, I guess, kind of tell us, where do we stand coming out of the third quarter right now as we get October kicked off here into the fourth quarter in this cattle market?
October live cattle are about where they were back in February, so we haven't covered much ground in a year's time. December cattle about the same here. We are in that delivery process here with the October live cattle, and I looked there last night on the sheets. We were at February 10th here on the old estate, and price back then was 145.07. Surprise, surprise, we're trading from 144.5 to 145.5 right now. So we really haven't done much. We had that nice run up here earlier on the anticipation we were going to have, lower numbers coming at us here this fall and into fourth quarter, but as we've gotten closer, there's been questions about demand with the economy and things like that, box beef movement, and there's also been some higher slaughter numbers coming at us too. Now, higher slaughter will equate to eventually getting worked through these cattle, but there were still some more cattle out here than they anticipated here at this time here in the fourth quarter.
Got a lot of drought continuing to plague and persist. Are we taking away shackle space from fed cattle still having to kill cows at this time?
I think there's a little bit of that, and I think once we get some cattle here off grass here up in the northern plains here in Nebraska and further north, maybe not so much South Dakota. I know they got some rain this summer, but here in Nebraska, I think there's going to be a few more cows killed here this fall. And speaking of drought here, that's kind of really translated over here into the feeder cattle market. We saw on the 29th of August here, the index is over 181, 182, 183 up in that area on the cash index. Now we're down here to 174.16. We've lost about $8.50 here since the end of August on that feeder cattle index, and most of that has been the drop in the southern plains because they've simply had no rain. The fall pastures are done down there, Texas, Kansas, Oklahoma, southeastern, western, or in the eastern Colorado. Just simply haven't had the rain here to run cattle on this winter as far as stockpile grass, and the same thing's kind of translating over here into the wheat pastures. Now, there's a few places down there that do have some good wheat pastures, but for the majority of that Kansas wheat pasture, Oklahoma wheat pasture, it's not looking good right now, and that's definitely backed off the calf market down there.
And that calf market in particular is really interesting in the southern plains. What are some of those feeders thinking? I mean, in Garden City down through the panhandle of Texas to Amarillo, are they trying to get corn out of like the big I states to get down there, or what are they thinking? And for a lot of these big feed yards,
I've seen and I've fielded a lot of phone calls here from merchandisers and feed yards down there in those southern plains area, panhandle of Texas, Oklahoma, and southwest Kansas, looking for rail unit trains here. And they've gone as far east as Illinois and Ohio to try to procure some of that, and they have gotten it done, but it's not cheap to get it there. And it's not cheap buying it either.
Exactly. We're seeing some very strong basis down there for old crop as well. Now the new crop's starting to come out. With the October cattle on feed, do you think we can finally start burying through some of these placements, or do we continue to see those big numbers?
That is possible, but I think we're going to see some bigger placements yet again this month here, because if we look at the spreads like the D's to Feb, April, and April, June, those spreads were all in bearish territory. Now, they had gained a little bit during the month of September, and those cattle will be used for the October cattle on feed report, but they were still in historically bearish territories. It still says we've got plenty of cattle here for a while stretched out in front of us, at least until we get halfway through 2023. The question is, we may have lower cattle numbers coming at us and decent slaughter rates, but the question still remains is the demand going to offset that? Do we have less demand, and is that going to offset each other? That's the million-dollar question there.
Kyle, I go over here to the beef side, the actual protein side of the market as well. What about those seasonalities where we'll see maybe a little bit of a run-up coming into December, November, with the holiday season approaching? Does that help the cattle market? Do we look to have that seasonal this year with the way inflation's been running?
It should help, and I'm thinking that we're close to a low here in box beef. However, you hit the nail on the head. The question is, how's this economy going to straighten up here going through the beginning of the fourth quarter here? How are consumers going to, discretionary spending, and how are consumers going to be spending that dollar here in the next 30 or so days here? Once we get into the Thanksgiving, we get into the Christmas shopping season, and they open those credit card bills, and with interest going up and things like that, people might back off just a little bit on some of these higher end cuts of beef. Now, we've seen demand really good up until now. The exports have been good up until now, but our dollar has also been on a recent rally that I'm a little bit concerned could take away some of our export business here.
So definitely exports are something to be concerned about. However, China, it's been kind of interesting, seems to have kind of increased their buying with that. Is that because of those phytosanitary issues they had in Brazil, or are they just liking the U.S. product?
I think there's some of that, and they also want to get something procured there too out front. Make sure they've got a known source and they've got a reliable source here to get some of their get their beef, in their hands. But question is, over there, every other day or every week or so, you see headlines of locking down because of COVID again. So the the demand is still questionable coming from them as far as how much will they take? Are they going to be locked down? How are people going to eat while they're locked down over there? People eat a lot different over there than they do over here when they were locked down.
Here's the million-dollar question, Cal, and I know it's one that a lot of guys are thinking about. Okay, we've bought high-priced feed. We're set in. We're ready to feed through this winter, get into next year. Where we're at in this cattle cycle, if we can get rain, that may be even the bigger question, and I know you're not a weatherman, but where we're at right now, are like heifers and things going to be at a premium 12 months from now if things start to look a little better pasture-wise?
That's extremely possible that heifers could be at a premium here in, even as quick as 6 to 8 months if we get decent rain. Now, it takes a long time to build up some of these pastures up here in the northern plains. I know it takes a lot to build up pastures in them southern plains too, in order to get guys more comfortable that they can buy heifers and retain them there for the breeding herd. So it's going to take some time, but yeah, in a year's time, we could see some high-dollar heifers out there. I'm kind of disappointed, and I'm not surprised, though, what cows are bringing and young cows are bringing here in the sale barn, because people just simply don't have the feed in some of these areas to winter cows.
We're talking with livestock market analyst Kyle Bumsted. Kyle, we appreciate this deeper dive we've taken into the cattle market. Looking here going to the fourth quarter. Before we go out, though, final closing thoughts for us, big takeaways.
Big takeaway is watch interest rates, have really good open discussions with your lending institutions about these short-term livestock notes and things like that, because I think a lot of folks are going to really get an eye-opener here when they see what interest is really racking up here. Also, don't be afraid to buy some cheap protection to the downside. Yes, nobody likes it when puts don't work, but they are a fail-safe in case things do not work for you.
That again, the livestock market analyst Kyle Bumsted joining us here on the Rural Radio Network, discussing more in-depth the cattle market. Of course, you can always hear Kyle's take on the day-to-day actions happening in the livestock trade when you catch his 11:10 report right here on the Rural Radio Network. Thanks for listening. As well, catch our full conversation, both parts 1 and 2, uninterrupted as a podcast, ruralradionetwork.com.